Hello guys, today I will try to explain why Warren Buffett has not or did not buy mutual funds and ETFs. So do you have an idea why is that? Mutual funds and ETFs companies, they say to you, oh okay, in order to make it in the market, you should buy mutual funds and ETFs, okay, because we have less risk, okay? That's what they say. Now, why do you think Warren Buffett, who is one of the best investors in the world, did not buy them, okay? Although they are there, and so what's the problem? Now, there are many problems when you buy mutual funds and ETFs. Okay? First, there are fees. It means ETFs has less fees, like 0.50% or 0.80% or whatever. Now, mutual funds, because they are managed, so they can go from 1% to 3 or 4%. Now, this is about fees. Whatever the managers do, for example, in mutual funds, whatever they do, they buy, they sell, they do stuff, it is all on you guys. It means when you buy mutual funds, this is added fees. Okay? Added fees. Another important thing that you should know about mutual funds is you will never know how much they take from your account, because it is all hidden. Even if you call them and you want to check, you will never know, because your numbers is mixed with millions of other people's numbers. So you will never know. Okay? So that's why this is the major thing that Warren Buffett has never and did not buy mutual funds and ETFs. Okay? Now, another thing is that when you buy stocks, you are sure how much you bought them because you have the numbers. Okay? You have the numbers. You bought $10,000 of a stock, 500 shares or 200 shares or whatever is the company. Okay? You know exactly how much you bought the stock. What is your commission? Okay? Commission, let's say $5 you bought them. Now, you stay 10 years. Okay? 10 years holding the stock. And let's say this company is good. Okay? Now, you get dividend each quarter. So for these companies that give dividend. So you know how much dividend you get. So in general, when you buy stocks, you will know exactly how much you spend, how much commission, everything, and understand for example, in investing. If each year you buy hundreds of shares because you have some money and you want to buy each year, so commission is very, very little. Okay, it's not a big deal. Not like when you do day trading or you do swing trading, when you buy and you sell, it will generate a lot of expenses of commission. Okay, but investing, you can buy stocks in 1 year, and then you save a lot of money. Next year you can buy more. The other year you buy more, and you make a bigger account. But when you buy stocks, you will know 100% your numbers. Okay? That's why Warren Buffett, he doesn't care about all these things. And he manages his stocks better than those managers. Okay? It means he has a way to do it. So he is doing the same job as the mutual funds, but instead of working for others, he worked for himself and for his partners from the 50s, 60s when he bought stocks. So understand for you that in order to control your money and to see how much you made or how much you lost and what is your expense, if you are an investor, you should try to do it by yourself. Do not give your money to other people, and you will never know how much fees or what they take from your account. Okay? Now, a stock, for example, gives you 3% dividend or 5% or 2% or 6% each year. Now, mutual funds, all these things are hidden. You will never know how much you made, how much you lost. And go to any mutual fund. Okay, all the most mutual funds. After 10 years or 20 years, you will find that you are always getting like 6% or 5% or 4% or 2%. And some mutual funds, you will see yourself you are losing money. Okay? So this is because of the fees that accumulate. Okay? So for me, my opinion is, if I want to go and make like investment, I will never choose mutual funds or ETFs because of the fees. I don't want to spend money, and some people or some managers took your money and you don't know how much exactly. Now, here when there is a 401k, for those who invest in 401k, this is something else, because you have no choice. The company is matching some money for you, so you have no choice. Okay? Because if you want to do it yourself, the company, let's say you want to invest by yourself, you put $100, $200 in your account each month or each paycheck. This, you will miss what the company gives you, because the company will never give you money, and unless you go to mutual funds, because mutual funds, they are taking fees, and there are a lot of things that go with it. That's why the company, if the company, for example, there is no company that gives you a profit sharing plan when you want to do it yourself. For example, let's say you want to put $200 in an account, and the company will match 100%. For example, it gives you $200, so you have $400 each month in your account. So although you are still working with this company, but they will never give you money for you to choose your stocks. That's why when you go to 401k, you don't find stocks. Now, understand why. Have you this idea? This is just a comparison. When I say Warren Buffett, why he doesn't buy mutual funds and ETFs? Because of the fees. When you buy stocks, there is no fee. For example, you buy Apple, or you buy Facebook, or you buy Amazon, and you stay, for example, 20 years. There is no fees. The broker doesn't ask you to pay because you hold the stock for many years. Okay? Now, when you have a mutual fund or ETF, you have fees each year. These fees are hidden. That's why the price that you see is not the real price. Each year, the price of this mutual fund is, there is a decrease. So the price that you see is not real, because they take fees. So it is lower than the market, than the real market. And as I told you before, in order to control your money, you should never use mutual funds and ETFs. This is because they take money and they take fees. So that's why, in general, Warren Buffett has not bought mutual funds, because he is managing his stocks by himself, according to his way, according to his vision. And the advantages that he got is that he doesn't pay fees. Okay? He doesn't pay fees to anyone. And whenever he wants to do a big transaction, he's not doing day trading or swing trading that each day he buys and sells. So all his account is becoming bigger and bigger and bigger, because if you think about the fees, let's say his portfolio, Warren Buffett's portfolio, if you compare it with a mutual fund portfolio. Now, mutual fund portfolio, the manager take fees from the portfolio for himself. Okay? And Warren Buffett is working with his partners for the wealth of everybody. Okay? That's why you see that there is no 3% or 2% or 4% fees for this stocks, because the stocks, they have no fees. Okay? And if you ask about the risk is for mutual funds and for if you make your own portfolio, the risk is you don't pay fees. For example, you want to do a portfolio, let's say 25 stocks or 50 stocks or 100 stocks in many years. You are just having good companies that you think they are good, and each year you put money in them, you put money on them. So what is the difference between your portfolio and a manager mutual fund portfolio? The good thing is, if you get dividend, you get them all for you as a passive income. You can take them without selling shares. Okay, this is for dividend. So you are getting something, and you are not paying fees. 2 or 3% is too much. Understand that these managers becomes billionaires because of this. That's why we say Wall Street, they take the money without risk. So that is the thing that makes them so rich. And then when they are rich, they can buy more stocks, they can buy whatever, and they become more and more and more rich. Okay? So thank you very much for watching. Please, if you have any questions or you have something to share with us, please write it on the description, and please subscribe to my channel, and thank you very much.